What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 6th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, or at least that you're holding in there, as I know it's been a rough 24 hours for the cryptocurrency markets. In just the past 24 hours, we've seen Bitcoin dip down below from the $40,000 retest that we saw on May 4th, down here towards the $36,000 range, a near 10% dip in Bitcoin's price over the last 24 hours, one of the worst sell-side days we've seen since as far back as January of this year, just over the past couple months. So I want to spend some time to talk about our thesis we've been talking about here on the channel, the worst case scenario we talked about the other day, and on top of that as well, talk about the important things you should be watching to understand where Bitcoin's price is likely going to go. Because there are various different narratives being shared throughout the market, and I want to try to give as much of a concise point as I can on this. But first off, I want to go ahead and say what should be said in this case. As you all know, we do technical analysis here on the channel. We try to understand where markets are going. We try to do things in the most rational way possible, at least with the data and information that we have. We try to cut out all the bias and noise. But I got to be honest with you all, the focus point we've been focusing on that has been remaining true throughout the year of higher lows and higher highs has been invalidated here. We have seen a sell-off here in Bitcoin's price across the exchanges, pretty solid volume, the most volume we've seen since as far back as March of 2022 or March 16th. And on top of that as well, again, one of the worst sell side days we've seen here, down here towards a retest of the 36K range. Now, all the while, it's not Armageddon here. And all the while, we did do a video just the other day talking about our kind of worst case scenario, which we haven't even materialized yet. I do want to go ahead and say one thing here, guys, which is that my more optimistic narrative isn't true anymore, and it was proven wrong to a degree. And as much as I will talk about where I've made successful calls in the past, calling not only for not going to 100K plus in November of 2021 or into the new year 2022, and also rather calling for the correction down to 30K, right? We've made some good calls in the channel, but I'll go ahead and say first off when we've made wrong calls here in the channel. And I think the thing that I didn't really consider here, maybe I was a bit too blindsided by, is really how confident the Fed is getting here when it comes to pulling back quantitative easing, or rather quantitative tightening, engaging in quantitative tightening, and also rising interest rates. All the while, I understand people are happy to hear, well, at least they're not going to 75 basis points, going up by 50 basis points each and every FOMC meeting. At least that's what the Fed is saying they're going to do, and we'll see if they stick to their word on that. No matter what, it is pretty startling to the broader equity markets at this point, especially considering how much of the retail volume that really drove the NASDAQ here over the past year or so has really started to fade. And all the major sell-side events we've been seeing for Facebook, for Amazon, for all these companies, Netflix, you name it, all the technology companies have really been getting hit, with Apple being one of the few exceptions really holding up well. And that's dragged the NASDAQ down a pretty solid bit here. A lot of the traders that I follow, who are usually originally trading in equities, they are out there in cash, and that is something to consider here at the end of the day. Now, the one thing I do want to bring to your attention, though, is all the while we've seen this correction here, I want to go ahead and talk a little bit about what we talked about as our worst case scenario. Now, I got to be honest with you guys here again. I'm going to stick to my guns here again, and maybe I'm wrong 2 times in a row, but I'm going to be confident in my statement here in the sense that, again, all the while we could expect some further decline in price, there is a limit, a threshold where it genuinely makes sense at the end of the day, where it makes sense to see price actually go down until we start to see people limit buying and also leading the charge on the market order flow, which is going to drive price back up. I don't know how quick it'll be or when it's going to happen exactly, but I'm going to go ahead and give you guys the valuation range that at least seems reasonable. And where I think dollar cost averaging, building positions, that's where it probably makes sense. Okay, so let's go ahead and talk about it here. Now, the narrative we talked about the other day here is a chart, and I don't know if you guys can see it very well, but if you guys didn't see our Bitcoin, how bad can it really get video, we talked about a realistic scenario where Bitcoin could drop another roughly 15-17% from its given price range of where it was at the time, where it would come down here towards a total aggregate market cap between Bitcoin and Ethereum down here towards around $850 billion, right? Roughly around a little over a 15% correction from that point. And we're still, ironically enough, around that range, just a little bit closer, a little bit less needed to reach that decline target. But generally speaking, that is taking the aggregate market cap of the 2 leading cryptocurrencies, which have really been kind of outpacing the vast majority of the market. So they're the benchmark for me, as that's where I'm looking to average in over the next few weeks and months. Bitcoin and Ethereum being around $850 billion, I think is a totally reasonable level, and it does call for more correction from this point on. But the question remains, why is this range so critical and important? And why also would I disagree with the more dramatic bearish calls of going to 20K or 15 or 10K, whatever levels people could toss out, right? Anyone can draw those numbers out of a hat and stuff, right? The reason why I think it's important to not get caught up thinking about incredibly low levels, but also to reach for this kind of rational range is for two reasons. First off, let's talk about why Bitcoin can correct to this range. First off, we are already in a general decline here. That's important to note here. The trend right now, at least in the short term for the month of April, really over the last month here, as we go into the early part of May, has been downward, right? The bears are in the lead here. We have now invalidated the higher lows here. So it is important to realize that price could capitulate a bit further. A couple of people could get liquidated, and that's enough to drive prices down here towards this $850 billion range of the market cap. But it's important to note and not get too bearish, because we have been on the longer term time frame not only maintaining higher lows here over time, which I think we're going to see play out here, right, when we're really talking about as far back here as January 2021. But it is critically important to focus on the fact here that we have been maintaining this range as support, as an ascending line of support against the previous resistance or the peak blow-off top of the December 2017 bull market. I think that cannot be understated enough, guys. It is incredibly important to watch this price range and to not try to challenge it or get too bearish here. And even if you do get some kind of retest, maybe down here towards the low range here of 750 billion or 800 billion, I don't think it's going to last very long. I wouldn't panic sell going into that. In fact, I would probably be dollar cost averaging in. I like to buy on 50% discounts. And again, even worst case scenario, so I'm absolutely wrong on it. Let's say that I'm completely out of the woods in this case. Still, buying in on a 50% discount and continuing to dollar cost average from there is probably one of the best ways you can get into crypto for the long term, so long as you got a long-term time horizon. Just want to go ahead and say that. Ironically enough, even if I was completely wrong on it, it's still a great time to pick up assets. And sure, someone would say, oh, you could have waited a while and you could buy it at a 60, 70% discount. But I got to tell you guys, the kind of bear markets that people are calling for and stuff, I don't think we're going to be getting 80% corrections or 75% corrections. And I want to bring up that point here. And this is why I think, again, calling for 20K, calling for 10K, I mean it in the kindest way. I just don't think it's a proper thing to do. And the reason why is because nowhere throughout history in crypto, and I'm going to go ahead and pull ourselves over to BLX here. Actually, I'm going to pull up the Bitcoin all-time history. Okay, we'll go to the all-time history index here. Turn off all our drawings here and just take a look at price. All right. Nowhere in history, even if you guys think this is a bull market top here, right? Nowhere throughout history have we set in a new cycle top for Bitcoin in one of its bull markets where we've had a bear market correction down to the previous highs. And I'll go ahead and show what I mean here on the chart. So if you guys, for example, I'm going to go ahead and I'll clear the drawings here so we've got a clean slate here to work with, right? If you think this was the cycle top here around $66,000 here at 65K, if we go down here and we get that 70, 80% correction, very typical of a crypto bear market, right? It's kind of, I think, worst case scenario would be 80%, right? Like under most people's bear market definition terms. But even some people are like, no, we're only going to get like a 70% correction, right? Okay. That would either, in that case, either of those would lead you down here towards touching the previous cycle top. Okay. Let's take a look at the previous cycles here, where we've had even worse corrections. Here at $20,000 coming down towards the $3,100 range. I remember that very well. Even though we corrected 84.4% here, roughly speaking, we didn't come down and touch the previous high here. Nowhere near that range here. Let's go ahead and do the same here for the previous bull market and entrance in the bear market. We had, in this case, an even worse correction, near 86.48% correction, but we never came down here to touch the cycle high. Far from it, just like over here. And this is the point that I want to bring in here. All the while we could come close to it, we could come here towards maybe 30,000. I think it's completely irrelevant and out of the question to think that we'd come down and touch 20K. If we really come down and touch $20,000 for Bitcoin, that is going to signal a lot of concern for the long-term growth potential of crypto and might be a sign that crypto adoption as a whole has really peaked out, that there are no longer going to be more future use cases. That would be a really big trend reversal. Again, just to kind of signal here for price what that would look like. Because I think we haven't really envisioned what that might look like here. Coming down here towards this range, starting to trend lower, right? So this is generally starting to push us from a long-term upward trend here, upturn parabolic trend, to potentially starting to turn over here and not see Bitcoin continue higher in the parabolic fashion that it used to, but start to drag lower here. That would be a terrible thing to happen here for crypto. And I just don't see the reasoning why that would happen. Crypto adoption is still so early on. And on top of that as well, you've still got rampant devaluation of currencies across the world. And while the Federal Reserve and central banks are doing temporary steps to rein in that excessive capital, I don't think the desire for cryptocurrencies is going to wane out due to actions of the Federal Reserve. And a key point I want to bring up here that we talked about a lot on the channel here is that all the while the Federal Reserve does have a major weight when it comes to equity markets, traditional assets, where much of that funny money over the last 2 decades has gone into propping up equities. If we take a look here, and we can see here, the NASDAQ, again, has been really driven here in the last decade or so, a Fed monetary policy experiment. And now that they're tightening, it's starting to pull it back big time. But if you take a look at the BTC ratio against the NASDAQ, you will see here very quickly that it does not matter what the Federal Reserve is doing. It does not matter really where the NASDAQ is going long term. Bitcoin continues to outpace the NASDAQ time and time again. You put it on the standard chart, makes it all the more clear and relevant here. And the long term, all the while Bitcoin is volatile, it does not give a crap about what the Federal Reserve is doing. We did that video a while back, many of you might remember it, where we showcased the periods of quantitative easing and quantitative tightening. Bitcoin has lived through these cycles before. I want to make that very abundantly clear. It's been through Fed quantitative easing and quantitative tightening. It's been through interest rate hikes and interest rate reductions. And it is seen and proven in this case that it does not care about what the Fed is doing. Because no matter if interest rates are at 1 or 2% or even up to 3 or 4%, or if the Fed is introducing more money into the system versus removing it from the circulation supply, it doesn't matter, because overall Bitcoin is such an early stage market. The growth multiples, the room for adoption growth, it's like the internet back in the 90s. It does not care about what the Fed is doing. Do you think MicroStrategy, who's been a huge purchaser of Bitcoin, cares whether or not they have to take out a loan from a creditor who's willing to lend to them to borrow at 1 or 2% or 3 or 4%? MicroStrategy is still going to take all that credit and they're going to go ahead and buy Bitcoin. And the same goes for institutional investors who are doing the same. Same goes for retail investors who are dollar cost averaging every single week, getting paid in crypto. They don't care. It is the preferred asset class of our generation. And that's a really exciting thing to know here that, and again, I think we've seen it materialize here even in the past few years, right? Since back here in December 2020, we've been setting these higher lows here for the NASDAQ, for Bitcoin against the NASDAQ in the ratio. Excuse me for not clarifying that very well. You guys can see here the higher lows here, right? We've been building in a wedge here. And I think the important thing you guys need to watch, and this is kind of the third part of the video here on what to watch. The first thing to watch here is where we could expect the NASDAQ going. I think, again, worst case scenario is you get a full scale 50% bear market here. You come down towards this mid-range in 2001, as well as here in June of 2015. By the way, just to specify, this is divided by the M2 money supply. So just so you guys can build the chart for yourself, it's NASDAQ 100 or IXIC divided by M2SL. M2 money stock, right? So we've got generally this potential for a 50% correction. I think the kind of more realistic scenario would be coming down towards this general support line, right? It was previous resistance back here in the past, turned into new support back here in March 2020, November 2018, right? That's kind of the midterm scenario. And the best case scenario is that maybe we don't get such a dramatic correction. Maybe we get a 30% correction in the market and then we start to see a rebound similar to what we saw back here. I'm gonna make sure I get my math right. Yeah, around here during March of 2020. We could see something like that. But again, no matter what here, we have our ranges here for the market. And what I think is important to focus on is we want to start to see this ratio continue to hold here. We want to see that Bitcoin is able to hold out at that support range, right? As both probably Bitcoin and the Nasdaq are probably going to correct over the next few days. What we want to see is that the buyers are coming in around that $30,000 to $35,000 price range, right? We want to see that they're coming in and providing that necessary support. Whereas Nasdaq and all the other major stock indices are continuing to decline. This is where we can start to see a breakaway from the supposed correlation. Because all the while, yes, we've seen similar upward moves and downward moves in the asset classes in similar days, and a lot of metrics can showcase that similarity. It's important to note that we have, for more than a year now, nearly a year and a half, we have seen crypto, in this case Bitcoin, continuing to make those higher lows on a much longer time frame against the Nasdaq. And I think that cannot be ignored. Perhaps that gets invalidated, perhaps it breaks down, who knows? But I gotta tell you all, 4 times in a row is a pretty interesting sign. It's a sign of potentially the changing times of capital allocation flowing rather than equities into cryptocurrencies long term. And here's the really interesting little tidbit that I don't think anyone is watching right now. The ETH to BTC ratio. Now, you guys probably would have thought, I probably would have thought as well, if we were to break down from that 40K range down to 36,000, I would have thought, well, probably Ethereum's getting hit probably even harder. Maybe whereas Bitcoin had a down day of 9 to 10%, Ethereum probably be down 12, 13, 14%. Ethereum didn't do that. In fact, Ethereum is weathering the storm quite well. It went up 1.46%. The previous day, right, from the actual lows down here, in total we've gone up for the pair here from the lows around 3.3%. Now I got to tell you guys again, we've talked about this time and time again since as far back as May of 2021. If we are technically in a bear market, we should not see the ETH to BTC ratio holding out this well. We should not see an altcoin, even albeit the second largest cryptocurrency, and the biggest altcoin of that matter, surely we should be seeing it go down if there is some absolute scare that the crypto market is going to correct 80%. And since May of last year, early April of last year when the rally came through, we haven't seen that. Ethereum has maintained its dominance. And there are a flurry of other altcoins that are still thriving in this ecosystem. Luna, a lot of others. So my key point here is this. All the while, we may expect that prices, let me make sure I get my right chart here. There we go. Even though we might expect Bitcoin to come down into this range, the kind of destined range it's come down multiple times in the past, I think more than anything, this is a period of time where we can't let irrationality get the better of us. We've got to be passive. We got to weather the storm, got to bunker down in this case, and get ready for a little bit more volatility. And I can promise you all in this case, more likely than not, things will work out, at least according to history. We'll be able to weather the storm. Crypto will be here. It's not going away. Just take a deep breath and think about the future when we see more adoption for crypto, higher prices, more use cases, and the inevitable future where crypto is going to continue being the leading digital asset for a growing millennial and Gen Z generation. Anyways, I hope this video proved valuable for you guys. Whether you agree or disagree, it's no worries. It's fine. We all have different opinions, different takes on it, different perspectives. For that, take mine with a grain of salt. Take anyone's for a grain of salt, right? And I do want to emphasize one key point here, guys. I know sometimes I can kind of talk in absolutes. I try to at least drag out a lot of the kind of like more dramatic stuff I hear sometimes in the market. But I want you guys to know, again, don't take anything I say at absolute face value. You got to go out there, do your own research. I don't want to be a monolith of opinion or truth. I certainly am not. And on top of that, no one else is. It's important to pull from various different sources out there and make your own decisions. And at the end of the day, understand we're all just trying to do the best with what we've got. So that being said, everyone, hope you could drop a like on the video if you liked it, and I'll see you all in the next video. Take care, everyone.